So students, in this video I will be discussing about the topics that will be covered during week 8 of our regular classes. So during week 8 the most of the content that we are going to discuss is on budgetary control, that is flexible budget and functional budgeting. But still during day 1 I will be continuing with the managerial decision making, that is sell or further process decisions, make or buy and operate or shut down decision, that is I will be solving problems on these decisions. And day 2 I'll be starting with budgetary control, that is I'll be giving you the introduction for budgetary control, meaning of budget, the nature of budgetary control, then the meaning of budget, budgeting and budgetary control, the objectives and characteristics of good budgeting. I will be discussing about requisites for successful budgetary control systems, essentials of budgetary control, and I also will be discussing about the uh, cost behavior with the change in volume, that is fixed, variable and mixed cost behavior. And I will be continuing the same during day 4, and during day 5 I'll be starting with variance analysis. We will be discussing about cost variances and revenue variances. So theoretical part of managerial decision making, that is shutdown decision in marginal costing, is already discussed during week 7, and I'll be solving problems under this decision making process. So then I will be starting with the functional budget and the there is a functional and flexible budget. Before I start with this, what is the functional budget and what is the flexible budget, I will be giving you introduction about budgetary control. So as we all of us know, planning is the basic managerial function which helps in determining the course of action that has to be followed for achieving organizational goals. That is, it means planning means the decision in advance, what to do, when to do, how to do, and who will do this particular task. So plans, they are framed for achieving better results. Control is the process of checking whether the plans are being adhered to or not, keeping record of progress, comparing it with plans, and then taking corrective measures for future if there is any deviation. So every business enterprise needs the use of control techniques for surviving in the highly competitive and changing economic world. There are various control devices that are in use. Budget is one of the most important tools of profit planning and control. And these tools, that is the budgetary control tool, also acts as the instrument for the purpose of coordination. And what do you mean by budget? Actually, this is the monetary or and the quantitative expression of business plans and policies to be pursued in the future point in time. The term budget is used for preparing budgets and other procedures for planning, coordination and control of business enterprise. So according to CIMA official terminology, a budget is a financial or quantitative statement prepared prior to a defined period of time of the policy to be pursued during that period for the purpose of attaining a given objective. And in the words of Crown and Howard, a budget is a predetermined statement of management policy during a given period which provides a standard for comparison with the results actually achieved. Now, what is budgetary control? It is the process of determining various budgeted figures for the enterprises for the future period and then comparing the budgeted figures with the actual performance for calculating variances, if any. First of all, budgets are prepared and then actual results are recorded. The comparison of budgeted and actual figures will enable the management to find out discrepancies and take remedial measures at a proper time. Budgetary control is a continuous process that helps in planning and coordination. It provides a method of control. It means the end result. Now, budgetary control involves the objects that are set by preparing budgets, and the business is divided into various responsibility centers for preparing various budgets. The actual figures are recorded, the budgeted and actual figures are compared for studying the performance of different cost centers. If actual performance is less than the budgeted norms, a remedial action is taken immediately. So, this is as per the definition of the budgetary control. Now, why budgetary control is important? It is important for planning and control. It acts as an instrument of coordination, as I already told you. So, the objectives of budgetary control are to ensure planning for future by setting up various budgets. The requirements and expected performance of the enterprise are anticipated. To coordinate the activities of different departments, to operate various cost centers and departments with efficiency and economy, elimination of waste and increase in profitability, to anticipate capital expenditure for future, to centralize the control system, correction of deviations from the established standards, fixation of responsibility of various individuals in the organization. So now, what are the characteristic features of a good budgeting? A good budgeting system should involve persons at different levels while preparing the budgets. The subordinate should not feel any imposition on them. There should be a proper fixation of authority and responsibility. The delegation of authority should be done in a proper way. The targets of the budget should be realistic. If the targets are difficult to be achieved, then they will not enthuse the persons concerned. A good system of accounting is also essential to make the budgeting successful. The budgeting system should have a wholehearted support of the top management. The employee should be imparted budgeting education. There should be meetings and discussions, and the target should be explained to the employees concerned. A proper reporting system should be introduced. The actual result should be promptly reported so that performance appraisal is undertaken. If all these steps are followed, then we can say that the budget that has been prepared is of good nature. Now, what are the requisites for a successful budgetary control system? For making a budgetary control system successful, we have to follow few steps like, first you have to clarify your objectives. The budgets are used to realize objectives of the business. The objectives must be clearly spelled out so that budgets are properly prepared. In the absence of clear goals, the budgets will be unrealistic. Proper delegation of authority and responsibility is very important. Budget preparation and control is done at every level of management. Even though budgets are finalized at top level, but involvement of persons from lower levels of management is essential for its success. And this necessitates proper delegation of authority and responsibility. Proper communication system. An effective system of communication is required for a successful budgetary control. The flow of information regarding budgets should be quick so that these can be implemented. The upward communication will help in knowing the difficulties in implementation of budgets. The performance reports of various levels will help management in budgetary control. Budget education. The employee should be properly educated about the benefits of budgeting system. They should be educated about the role in the success of this system. Budgetary control may not be taken only as a control device by the employees, but it should be used as a tool to improve their efficiency. Participation of all employees. Budgeting is done for every segment of the business. It will also require the active participation and involvement of all employees. In practice, the budgets are to be executed at lower levels of management. Those for whom the budgets are framed should be actively associated with their preparation and execution. The employees, on the basis of their past experience, may give more practical and useful suggestions. The success of budgetary control system depends upon the participation of all employees of the organization. Flexibility in budgets is required to make them suitable under changed circumstances. Budgets are prepared for the future, which is always uncertain. Even though budgets are prepared by considering future possibilities, but still some occurrences later on may necessitate certain adjustments. Flexibility will make the budgets more appropriate and realistic. Budgets are to be implemented by human beings. Their successful implementation will depend upon the interest shown by the employees. All persons should be motivated to improve their working so that budgeting will be successful. So, a proper system of motivation should be introduced for making the system a success. So, we have to follow certain steps that are necessary for successful implementation of budgetary control system, like organization for budgetary control. The proper organization is essential for the successful preparation, maintenance, and administration of budgets. A budgetary committee is formed which comprises the departmental heads of various departments. All the functional heads are entrusted with the responsibility of ensuring proper implementation of their respective department budgets. So the chief executive will be the overall in charge of the budgetary system, and he will constitute a budget committee for preparing realistic budgets, and budget officer is the convener of the budget committee who coordinates the budget of different departments. So the managers of different departments are made responsible for their departmental budgets. Budget center. What is this budget center? It is that part of the organization for which budget is prepared. A budget center, it may be a department, a section of a department, or any other part of the department. The establishment of budget center is essential for covering all parts of the organization, and the budget centers are also necessary for cost control purposes. The appraisal of performance of different parts of the organization becomes easy when different budget centers are established. Now, what is budget manual? It is a document which spells out the duties and the responsibilities of various executives concerned with the budgets. It specifies the relations among various functions, like it clearly defines the objectives of budgetary control system. It also gives the benefits and principles of this system. The duties and responsibilities of various persons dealing with preparation and execution of budgets are also given in a budget manual. It enables the management to know about persons dealing with various aspects of budget and clarify their duties and responsibilities. Who is budget officer? A chief executive who is at the top of the organization appoints some person as budget officer. He is empowered to scrutinize the budgets prepared by different functional heads and to make changes in them if situations so demands. The actual performance of different departments is communicated to the budget officer, and he determines the deviations in the budgets and takes necessary steps to rectify the deficiencies if any. He works as a coordinator among different departments and monitors the relevant information. Now, budget committee is also very important in big organizations, but in small scale concern the accountant will be made responsible for preparation and implementation of budget, but in large scale concerns a committee known as budget committee will be formed. The heads of all the important departments are made members of this committee, and it is responsible for preparation and execution of budgets. The members of this committee put up the case of their respective departments and help the committee to take the collective decisions if necessary. So, what is the period the budget is prepared? A budget period, it is the length of time for which the budget is prepared. It depends upon number of factors, like it may be different for different industries, or even it may be different in same industry or business. The budget period depends on the type of budget, that is sales budget, production budget, raw materials budget, capital expenditure budget. And a capital expenditure budget may be prepared for a period of 3 to 5 years, and sales budget may be prepared for 1 year. That is, it depends on the nature of demand for the products, the timing of availability of the finances, the economic situations of the cycles, and the length of trade cycles. They are all play an important role in fixing the periods of budget. So we also have to keep in mind the key factor while preparing budget. As budgets are prepared for all functional areas, they are interdependent and they are interrelated. A proper coordination among different budgets is necessary for making the budgetary control a success. The constraints on some budgets may have an effect on other budgets also. A factor that influences all other budgets is known as a key factor or principal factor. There may be a limitation on the quantity of goods a concern may sell. In that case, sales will be a key factor, and all other budgets will be prepared by keeping in view the amount of goods the concern will be able to sell. So these are some of the aspects of budgetary control or essentials of budgetary control that has to be kept in mind while preparing the budget. So now there are few advantages and disadvantages of preparing budgetary control. Budgetary control system will help in fixing the goals for an organization as a whole, and hence some of the advantages of this budgetary control are: it helps in maximizing the profit, it helps in coordinating with different departments, as without coordination with different departments budgets cannot be prepared. And it has specific aims, the plans, policies, goals are decided by the top management, and all efforts are put together to reach the common goal of the organization. Then it acts as a tool for measuring the performance. When we prepare budget in advance and then it is measured with the actual or achieved performance, it becomes easy for measuring the performance. Economy, the planning of expenditure will be systematic and there will be economy in spending. The finances will be put to optimum use. The benefits derived for the concern will ultimately extend to industry and then to national economy. So, and hence it is important. It is one of the advantages, as natural resources will be used economically and wastages eliminated. Then it also helps in determining the weaknesses, and it helps in taking corrective actions, and it creates budget consciousness among the employees. By fixing targets for the employees, they are made conscious of their responsibility Everybody knows what it is expected to do, he is expected to do, and he continues with his work uninterruptedly. It helps in reducing the cost, and it also helps in introducing the incentive schemes. Now, what are the limitations of budgetary control? Despite many good points of budgetary control, there are some limitations like uncertain future. The budgets are prepared for a future period. Despite best estimates made for the future, the prediction may not always come true. Then budgetary revisions are required. They are prepared on the assumptions that certain conditions will prevail. Because of future uncertainties, assumed conditions may not prevail, necessitating the revision of budgetary targets. The frequent revision of targets will reduce the value of budgets, and revision will involve huge expenditure also. It discourages efficient persons. Under budgetary control system, the targets are given to every person in the organization. The common tendency of people is to achieve these targets only. There may be some efficient persons who can exceed the targets, but they will also feel contented by reaching the targets. And there will be a problem of coordination. That is, the success of budgetary control depends upon the coordination among different departments. The performance of one department affects the results of other department. To overcome the problem of coordination, budgetary officer is needed. Every concern cannot afford to appoint budgetary officer. The lack of coordination among different departments results in poor performance. Conflict among different departments arises and depends upon the support of the top management. The success of budgetary control system depends on how the top management supports for the system. Now coming to the main aspect of budgetary control, that is classification of budgets. So based on various aspects, budget is classified under time as long-term budget, short-term budgets, current budgets. Based on functions, it is classified into operating budgets, financial budgets, and master budgets. And based on flexibility, it is classified into flexible budget and fixed budget. So here it is important to understand the classification based on its functions. It is classified into operating, financial, and master budget. And operating budget, and it relates to different activities or operations of the firm. The number of such budgets depends upon size and nature of business. And some of the common operating budgets are sales budget, production budget, production cost budget, purchase budget, labor budget, raw material budget, plant utilization budget, manufacturing expenses or works overhead budget, administrative and selling expenses budget. So now in our regular classes, I will be explaining about all these budget with numerical problems. And what is flexible budget? It consists of series of budgets for different level of activity. It therefore varies with the level of activity attained. A flexible budget is prepared after taking into consideration unforeseen changes in the conditions of the business. Flexible budget is defined as a budget which, by recognizing the difference between fixed, semi-fixed and variable cost, is designed to change in relation to the level of activity. The flexible budgets will be useful where level of activity changes from time to time. When the forecasting of demand is uncertain and the undertaking operates under conditions of shortage of materials, labor, etc., this kind of budget is more suitable. So students, I will explain you how to prepare flexible budget, and now we will move on to variance analysis. So control of cost, it is one of the most important objectives of cost accounting and cannot be achieved without some standard against which actual can be compared. All managements are interested not only in knowing what costs are but also how satisfactory they are. The use of standard cost increases cost performance evaluation. Standard costing therefore helps managerial planning and control in a significant manner. So here I will be discussing about the variance analysis, so which is the part of standard costing. The function of standards in cost accounting is to reveal variances between standard costs which are allowed and actual costs which have been recorded. The Institute of Cost and Management Accountants defines variances as the difference between a standard cost and the comparable actual cost incurred during a period. Variance analysis can be defined as the process of computing the amount of and isolating the cause of variances between actual costs and standard costs. So variance analysis involves two phases: computation of individual variances and determination of causes of each variance. So first we will discuss how to calculate material, labor and factory variable overhead variances, analysis of causes, reporting variances to managers and accounting disposition of variances will conclude the study of standard costing. So material variance is classified into usage variance and price variance, and usage variance is further classified into mix variance and yield variance. Now what is material cost variance? It is the difference between the actual cost of direct materials used and standard cost of direct materials specified for the output achieved. So material usage variance or quantity variance, it results when actual quantities of raw materials used in production differ from standard quantities that should have been used to produce the given output. And material price variance occur when raw materials are purchased at a price different from standard price. It is that portion of direct materials which is due to the difference between actual price paid and standard price specified. Now, what is material mix variance? Material usage or quantity variance can be separated into mix variance and yield variance. Material mix variance is that portion of materials quantity variance which is due to the difference between the actual composition of a mixture and the standard mixture, and it can be computed. Material yield variance explains the remaining portion of the total material quantity variance. It is that portion of materials usage variance which is due to the difference between the actual yield obtained and standard yield specified. So these are some of the variances, and I will be taking up some numerical examples for explaining you the variances, and then we also will be discussing about overhead variances, that is labor variances and overhead variances. So direct labor variance arise when actual labor costs are different from standard labor costs. So in analyzing labor cost, the emphasis is on labor rates and labor hours. So labor cost variance is divided into efficiency variance, rate variance and idle time variance, and efficiency variance is further classified into mix variance and yield variance. Labor cost variance denotes the difference between the actual direct wages paid and the standard wages specified for the actual output achieved. Labor efficiency variance uh, occur when labor operations are more efficient or less efficient than standard performance. Labor rate variance is nothing but the portion of the direct wages variance which is due to the difference between actual rate paid and standard rate of the pay that is specified. Then labor mix variance is that portion of labor variance. See, for example, employment of men instead of women, sometimes workers and operators may be absent. So, standard labor mix may not be adhered to under some circumstances, and substitution will have to be made. And there may be changes in the wage rates of some workers. In such situations, labor mix variance will be calculated. So the final product cost contains not only material cost but also labor cost, and hence gain or loss, higher or lower output than the standard output should take into account labor yield variance also. A lower output simply means that final output does not correspond with the production units that should have been produced from the hours expended on the inputs. Then labor time, idle time variance, it occurs when workers are not able to do the work due to some reason during the hours for which they are paid. So I'll be explaining you the numerical problems on these variances. Then there is one more type of variance which is called as overhead variance. The analysis of overhead variance is more complex than variance analysis of the direct materials and direct labor. So overhead cost variance is classified into fixed overhead variance and variable overhead variance, and there is a further classification of all these variances which is dealt in detail in our regular classes. So friends, we will meet in our regular classes of week 8 and we will discuss in detail by taking suitable examples for your better understanding. Thank you.